Let's talk some charts and look at some analyst commentary with Rick Ducat and Renita Young, our chart master team this morning, as chips are in focus with the ARM debut happening right now. And there's a pretty positive commentary out on Micron and the memory stock maybe breaking out on the chart here. What are they saying?
Well, Barclays boosted the price target to $80 from $75. That's around a 12% move to the upside from where this stock is trading today. Also kept an overweight rating on the shares. And the analyst says that there's a stronger bit growth and pricing environment for Micron right now. And that's why he also increased the 2023 and 2024 estimates for the stock as well. Now, Barclays says that a recovery is starting in this stock, despite what happened in China with bans of American chips, and that the share price action, it is pretty strong. It's up more than 43% year to date when we look at Micron. Of course, it's not as high as a lot of its chip producer peers, but it's certainly beating the market.
Well, it's definitely working. So they add on another $5, given that we're almost to their 75, getting ahead of it. We did trade at that old target earlier this year with the high around $75. Rick, are we breaking out? I mean, we are. Tell us about it. I mean, it's a really interesting chart because if we get down to the minutia, we're still below where we were earlier this summer.
Exactly, and that's I don't mean to speak out of both sides of my mouth, but I would say yes, but no at the same time. Yes, we are breaking out, but no, we're not breaking out above a different
Depends where you draw the lines.
Well, we've got this downward sloping trend line here going across the highs, and we are breaking out from beyond that point. The 70 level, this green dashed line, that was also where price topped out and bottomed out several times. We saw some consolidation and a volume node around that area, so it was a point of heavy trading. We broke out beyond both of those, but we've stopped short. We did not take out our intraday highs of 72.34 from our last break above that 70 level. So yes, but no, we did break out, but we also haven't beyond another important threshold. Other things to consider: uptrend still in play off the lows. We've got kind of a triangular pattern if you factor in that uptrend as well. Given we had these lows here that came rather close to it here. Haven't spent too much time below our 252-day EMA in recent months here. Looking at RSI as well, we're making some new relative highs with price, so that's a good sign for the bulls here, but what you'd really want would be a break above this resistance level and a push into that overbought area. That would be typically regarded as a sign of strength here. So considering some support and resistance levels here, if we zoom in a little bit here, as I said, 72.34 is the first point to beat here. Then we've got our old high close, this pink line near 73.93. To the downside, if we break through our trend line and that 70 level again, that's kind of the first support zone to watch. Check out the 21-day EMA coming in near 68.66. That would be another area many traders likely would have their eye on.
Pretty good looking chart, right? Because arguably it's kind of breaking out already, and then even if it's not, you're pretty well supported. So if you're owning the shares and you've been in it, you're pretty happy with where it's at. If you're trading options ahead of the earnings, which are later this month, you've got some pretty clear levels to think about. So it definitely is compelling, fits into the bull case for chips overall. And of course, you throw in some positive analyst commentary and you get a nice rally on the day, up 1.5%. Also got a rally in FedEx, which has been doing very well, especially compared to UPS.
Absolutely. So FedEx shares, they're rising. The analyst over at Goldman Sachs took this stock to a level that assumes around a 9% move to the upside from where it's trading today, and kept a buy rating on the shares ahead of its first quarter results. Now, this analyst says there are a couple of cross currents that make the next quarter a little bit difficult to assess. And the positives are that it is picking up some of the demand in freight from UPS, since we know that it had labor contract negotiations that complicated business a little bit. And it's also picking up at least 1 month of benefit from freight demand from Yellow after it went through the bankruptcy. But some of the negatives are that there's weaker consumer spending going on, which means consumers are spending less money on things that need to be shipped, which means they're possibly less shipping. You know, it's ongoing slower imports happening from Asia, and then there's weakness in Europe as well. So Goldman is boosting its assumed forward earnings multiple to 12.5 times from 12 times, and that reflects other transport providers moving closer to what some say looks like some form of a freight bottoming over the next few quarters. And the share price action still strong, up more than 47% year to date.
Sounds like their competitive advantage relative to UPS and now post-Yellow bankruptcy is really the driving force for this analysis, because they do say that the macro outlook still is a little bit murky and hard to assess, but pump up the price target anyway. I mean, we've talked about this chart before, and it looks like it bounced right off that support line, the trend line.
Yeah, it's been a strong upward trend here since we hit those 52-week lows. Really a heck of a chart here, just straight up and to the right. You can see how many times this trend line has been tested since it was established. Here, couple times here, and then we came pretty close once again yesterday. We didn't quite make it there, but you know, trend lines are kind of fuzzy. It's more of a subjective thing depending on how you draw it. You know, so don't expect it to be too stopping on a dime when you look at things like this here. But really, just remarkable strength, upward swings followed by periods of consolidation over and over again, just kind of repeating here. But this time looks a little bit different here because we're seeing some bearish divergence in the RSI here, trending downward with momentum here, as price kind of trails off a little bit here. We broke below the 254 level, this period of our lows that we established here. We pushed below our 63-day EMA, which historically, given the past year, that's been a good buying opportunity, as a move below that 63 EMA. Sure enough, we recovered back above it. Now we're sandwiched in between the yellow 21-day and orange 63-day. So those are kind of the natural bookends to be looking for some support and resistance with this name.
Yeah. Beauty of a chart, minus maybe some of the weakening relative strength and some of the momentum, but still holding where it needs to hold is really important. And 4 times the charm, maybe even 5, 6, 7 if you go back here. It's just a remarkable trend that it's been able to hold. Last one is our down mover here. RTX has had some problems in the supply chain, and the stock is getting hit again today.
Yeah, down around 10% for the week. Oof. And this analyst at Bank of America downgraded this stock and cut the price targets in direct response to the company having that manufacturing issue with its GTF engines. Because of it, it's got to pull up to about 700 of its engines from Airbus jets over the next 3 years for quality checks. And so it'll have to book a third quarter charge of about $3 billion relating to those issues. Now, what that's been, of course, the shares have dropped around 10% since then. And while some think that RTX could be a value because of that drop, the analyst actually advises some caution because they see some significant near-term risks in this whole situation. They think that RTX is going to underperform the analyst coverage universe within this industry. So until there's a more clearer picture of what might happen and the necessary fixes, this analyst is saying, well, don't go crazy just yet. Yeah. So yeah, that's why they cut the price target.
I do like when the analysts specifically address kind of what a lot of people are thinking, which is, all right, pull back, let me buy this thing, it looks great here, but they're saying, look, it might look like that, but it's not the case. So an outright downgrade, definitely going to hit this stock. Already been a hit, though, really hard. Ever since earnings, it's been, I guess, trending lower, Rick?
I think the best thing you could say about this thing before earnings was that it was mostly sideways. But here, one day, 10% drop on earnings, rapidly followed by another one day, 7.8% drop here. So really taking a beating here. Not much relief in between those two things either, just kind of trending downward here in this channel. Formed a big volume node here as well. You can kind of see the two very clear areas of heavy trading here, around 97 and around 85. So those are key price levels to watch. But, momentum also looking quite bad for the bulls, trending lower here with new price closing lows, and we're below our -3 standard deviation channel, so that means we're at a relatively extreme point based on our recent price history here. That would be the point to look for some resistance. 74.41 is our -3 channel. Now you're at a crucial inflection point. Do you think think this thing's been beaten up too much and it's going to rebound based on this study? Or do you think the trend will continue and go down to the -4 channel, which currently comes in near 68? So that's a support level to watch, and then resistance, maybe 81.35, based on our old lows from here and from back further, almost 52 weeks ago.
Not a lot of hope in this right now. It doesn't seem like. Resistance everywhere if it does bounce back, and then bad momentum in the short term. So definitely stands out as a stock-specific story, stock-specific problem, like the chart and like the analysis. Thanks, Renita and Brad.